Hey, it's Kris with Investors Edge Real Estate, and I want to talk to you today about a different strategy in your retirement. So a lot of people, most people, about 96% put a majority of their money into the stock market. So I want to talk to you about a different way to spend, let's just say $250,000. So one option would be to put it in a CD. I was at the bank today and CDs are paying 1.2%. So $250,000 would give you about $3,000 a year. Stocks, maybe if you're lucky, you can get a consistent 5% return on something that's going to give you cash flow. So that would give you about $12,500 a year, which is obviously much better than that CD. But as you guys know, I like to preach real estate, and I want to talk about one particular way to do it. So that's what I love about real estate. There's a million ways to make $1 million in real estate. And one new option that I've been seeing out there, which I think is a great investment opportunity, is using the vacation rental market. Here in Phoenix, we have a lot of people that travel here year-round, and there's a lot of Airbnb and VRBO rentals out there, but they are consistently rented. So if you have a really good product, then you will consistently be able to rent it. So in the central Phoenix area, there's a lot of houses with studios. I've always thought that it would be a terrific idea. I have had Airbnb and vacation rentals in the past. So based on my experience, I think central Phoenix, if you can find a house with a studio that has a separate entrance, I think it's gold, because you can have both those rented out. The smaller units do very well on vacation rentals. They rent out easier than the bigger houses usually, and so you can have two income streams coming in on that. So let's talk about what an actual deal would look like. And today, this deal may be gone tomorrow, the deal that I came to look at today, but there's always going to be more deals. There's lots of houses with guest houses that you can fix up. There's lots of houses that you can buy below market. So the deals are going to be there. It's about wrapping your head around the concept and then being ready when that deal comes around. So here's my scenario. Central Phoenix, you find a property, like I said, a house with a guest house. Of course, the goal is we're investors, so we have to buy it at least, or we have to be all in for 20% below market. So we're going to probably find it, we're going to rehab it. So in this example, we're going to buy a $300,000 house, but we're going to be all in for $240,000, okay? Repairs, purchase, everything. You got to be in furnishings, $240,000 the most, so you have that instant equity. In the pro forma that I worked up, I think you could rent one unit for $50 a night, the other for $90, based on a very high vacancy rate, because you're not going to be rented every night. I believe a pro forma would show about an 8 or 9% cash on cash return on this type of an investment. So that would mean a net of about $1,600 to $1,700 a month income, which is not bad. It's better than the other two options. That's about $20,000 a year. But this is where real estate is better, okay? If you put your money in the stock market, you don't have any advantages. If it goes up, it goes up. If it goes down, it goes down. There's nothing you can do about it. So number one, instant equity. Like I said, we're going to buy this below market. You're going to have equity. You're going to be in it for $240,000, and it's going to be worth $300,000 fixed up, right? The second one is tax advantages. You deduct all of your expenses, obviously. Any bigger expenses could be depreciated over a longer period if you're buying maybe appliances or an air conditioner or something like that. And then depreciation. On a property like this, depreciation would be around $9,000 a year. So you take the $20,000 that you actually made, take off $9,000, and now for taxes you only made $11,000, and that's legal, and that's how it goes. That's how it's supposed to work. So that's beautiful, right? It's leverageable. I'm talking about being in all cash. If you want to leverage, go put leverage 50%, up to 70% even. And you can make that turn that $250,000 into two of these properties. And you're gonna have to pay some interest, so you won't make the entire $3,200, but you're gonna make a really good return. And then appreciation, of course. You bought it below market, but will go up, it'll go down, but over the long run, it'll go up in value. In the Phoenix area, on average, properties double every 12 to 15 years. So while nothing in life is guaranteed, it's something that happens time and time again. So like I said, you want to get ready to go. So this deal may be here tomorrow, it may not be, but you need to get ready. Call us, call me. We will set up a strategy for your retirement. We'll see how much you have, we'll see how much cash flow you need, and we'll help you create wealth. We're better than the stock market, like I said, because I can get you deals below market. I can get you instant equity. If you bought this deal, you would literally have $60,000 of instant equity the minute that you were done rehabbing it and got it rented. So, Kris Ontiveros, Investors Edge Real Estate Group. Follow us on Facebook and hit me up anytime. Send me a private message and we'll set something up. Thanks.